Welcome back to our listeners to Gold for a New Generation. Today is November 19th. My name is Rafael. I'm here with Steve. Steve, how are you doing?
I'm doing fantastic.
Awesome. So today we're going to talk a little bit about what's been happening in the gold market over the past short-term period and what we can expect over the next short-term period. As well as we're going to start our conversation about gold mining companies with a little bit of a brief explanation of what they're all about, and also start our first little chunk about talking about this subject by starting with why we shouldn't invest in the gold mining companies. So over the last 3 months, what I've been seeing in the gold price is a peak in August 6th of $2,062 per 1 ounce of gold. In 6 days after that, it dropped 10% to $1,881. And moving 3 months forward to today, November 19th, we are looking at $1,860. So basically what I'm seeing over the last 3 months is that there's no growth aside from a lot of volatility in between. Even to one point where over the past 3 months, where we've reached the 2,000 level per ounce of gold once again. So Steve, if you can just talk a little bit about what we've been seeing in the price of gold, as well as short-term expectations.
Yeah, so I think it has been an interesting last few months. I think, if I had one headline for just right this moment, it would be caution or patience. I think those are important things that I want to communicate to everyone at this point. So I'll get into that, but as you pointed out, we've seen this price kind of move up and down a lot. We had the election, it was up $100, and then down before the election. So it's been bouncing up and down a lot. And that you typically see that, like we had a big run up in gold July, maybe mid-June to early August, as you pointed out, up over $2,000 for the first time. And people got really excited about that. I was getting so many emails like, oh, I should have been in gold. Oh, now I understand why you should be invested in gold. And it's always hard at that point to not just jump in. And when you see that kind of excitement, okay, what's happened? We've kind of gone sideways and up and down for the last 3 months. And I think what we're seeing now in the market is I am starting to see a lot of people get pretty excited. They think, okay, we've had the election. That kind of uncertainty is out of the way. I'm all in. And I'm seeing that a lot. And that can be good because that's showing people are buying. You're getting that buying pressure, people are jumping in. But I'm also seeing a lot of people with a lot of leverage. I'm all in. I'm 300% invested. I'm 250% invested. And when I see that again, it's good that people are buying, but it also creates this fragility under the market, because if there's any sort of bad news or anything that just starts to cause the price to drop a little, those people are forced sellers. They're so aggressively invested, and as soon as it starts to drop, their equity value starts to drop. They're forced to sell, causing more selling. So, my view is, be cautious. This is not, this kind of volatility that we've seen. Yeah, we had a 10% drop from the highs. Not a bad time to buy. We talked about in the past that 10% drop happens frequently in bull markets. But what we also talked about is sometimes you get 25% drops. And that's still on the table. And when I see this kind of fragility in the market, there's no guarantee that that's going to result in any big drops, but the potential is there. The possibility, a modest probability is there when you start to see that fragility, that aggressiveness develop. And, a big drop, we could see $1,500 gold. We could see a 30% plus drop in the price of gold mining stocks. We want to be in a position that we can take advantage of it if it happens. So, big headline, caution, don't get too aggressive. If you bought, you hold on to it. You still, all the components of a long-term bear market are there, but you can get these short-term downdrafts from people getting too excited, and be ready for that if it happens. The patience part of the headline is when this starts to happen, people, they want to, okay, it's down $50. It's now the time. And usually what I've learned after, 14 years of following gold is give it at least a couple months. We might see a drop. Oh, okay. People start to go, okay, well, that's all that the drop is. And we see another drop, and it takes a little while to play out before people have finally, okay, I've given up. I'm going to sell it all. And that's when we want to be in a position to buy. When people are giving up, we buy from them, and that's where you can get the really good returns going forward. So I would say let's be patient until sometime in the new year, and we'll update people through the podcast. But it's a good lesson in real time. Now's the time to be fairly patient and fairly cautious. Don't give up on the long-term bull market, but be ready if this materializes into a big drop.
That sounds good. So I just want to recap that whole explanation. So basically what you're saying is we've seen a big run up in gold. There was a little bit of uncertainty because of the election. We're past the election. People are saying, look, the price of gold dropped a little bit. That's fine, but now I'm going all in. They're leveraging up high. They're creating an environment of a market in gold that's a little more fragile. They are leveraging and investing in gold because they're smart people. They know what they're doing, and they think it's time to invest in gold, and gold will spike up. So there is a chance that that will happen and that we will not see any big drops in gold. But if they get a little unlucky and they see gold price drops for any reason, and they are forced to sell because of their high leverage, there will be a big drop in gold, where that could create a lot of good opportunities for people to buy. And what you're telling people to do, or suggesting for people to do, is when you see those big drops, be patient. Don't get aggressive in buying too quickly. It might take a couple of months till it actually gets to the bottom of the drop. And on the other side, don't freak out and sell just because it's dropping. That's pretty
exactly. Yeah, that's a really good summary, Raphael. And that's, when we talk about volatility and taking advantage of it, we're not trying to say like, today I buy, tomorrow I sell, today I buy. Like, we're not getting that. We're just trying to help people, give them a sense that, hey, if you understand gold and you see that what we're talking about as far as how it can be really important, like to me, it's super important to diversifying a portfolio. You just don't want to be caught up in, oh, it's going up a lot, jump in. You just want to make sure you're trying to add in over time and take advantage of those medium-term drops if and when they happen. And certainly, for the average viewer, it's often hard. Like they're not really watching things very closely. And I'm just trying to share, kind of the art of watching the stuff and watching traders talk about how they're investing and speculators, and just many years of experience saying what I'm seeing is maybe now is not the time to make that super aggressive investment, and be ready. Might happen. That situation might exist, might happen. We can take advantage of it if it does. Give it a couple months and let's see what happens.
Absolutely. Okay, sounds perfect. So now let's get started on talking about gold mining companies. It's another big part of the overall, investing in gold environment. Why? Because what gold mining companies do, in very simple terms, they go and extract gold from earth, the gold that we are so interested about. Then they sell that gold that they extract in the open market for whatever it is it's sold on an average basis, on a quarterly basis. And that's how they generate their revenue. And once again, in very simple terms, they have to pay expenses for their operations and their human and physical capital. And what they get to keep, the earnings before the taxes and the interest that they have to pay, is the price at which they sold the gold that they've mined, minus the expenses it cost them to mine it. So gold mining companies, there are big ones and there are small ones. Some of the biggest ones that I know of are Newmont Gold and Barrick Gold. Interesting fact about Barrick Gold, I believe last quarter, Warren Buffett and his team have put a position of about 600 million into Barrick Gold, which I think was the 11th largest holder of the company globally. And then within this quarter, they actually sold 44% of that position, which is 200 and some million dollars, which is something interesting to note about Barrick Gold, the gold mining industry, and overall, just as an idea, uh, Warren Buffett isn't the biggest enthusiast about gold. So it was an interesting thing that it happened all together to begin with, right?
Right.
But definitely something to take note of. There's also small companies, small cap companies in the gold mining industry. They usually start to appear more and more when a gold bull market starts because these people who are starting these companies, they've obviously been interested in gold for a long time. They might have even worked for gold mining companies, so they understand the cyclical environment of the gold market, and they perhaps think it's a good time to start a company like that one. So Steve, you can talk a little bit about gold mining companies and what do you think about them?
Yeah. So I think, we've talked a lot about gold in our podcast, but there's kind of two ways to take advantage of investing in gold. One is buying gold, and the second is buying companies that mine gold. And, they do kind of move somewhat together, but not always. Sometimes, they start to diverge, or what can happen is gold mining companies, if gold is going up, gold mining companies might go up twice as much. Now, there's also when it goes down, sometimes they can go down twice as much. Um, so it is important to think about what role does gold mining companies versus gold have in someone's portfolio. Um, as far as gold mining stocks go, there's I think there's a lot of potential in these. Basically gold mining stocks, we've had this arguably 25-year bear market in gold mining stocks where they haven't really, they've gone up or they've gone down. And I think there's a lot of potential there. But they do have a history of often not being great investments. And, one thing that has really happened over the last 25 years is it's got harder and harder to find gold. And also as part of that, more and more expensive to mine it. And so, these mining companies, if the price of gold is here and the mining companies, their costs just keep going up and the price of gold doesn't go up, their profit margins are getting smaller, as you noted, expenses going up, revenues not changing, and their profits are really dropping. And the company's stock price, is going down and down and down. So that's a fundamental driver of gold mining stocks as an investment, that profit margin. And if the price can keep going up and they can keep their costs low, or at least keep their costs from going, not more going up more than the price of gold, and particularly if that profit margin can widen, those gold mining stocks, their value can jump dramatically, right? So that's where, these companies could be a super investment, but there's also a lot of negatives with these companies that I've touched on a little bit. But I definitely think, this is a place we want to look at, and it potentially could be the place to be in this gold bull market. So yeah, those are some kind of big picture things about gold mining stocks.
Cool. So yeah, that makes sense because if you're a believer in the gold bull market, if you think that there is a gold bull market over the next medium to short term period, a medium to long term period, And as you're explaining the revenue and expenses chart, and you're saying that, look, if a company can control its expenses, but the revenue will grow, perhaps either because they're managing to find more gold, and let's say the gold price is moving up as well, or even if they're managing to find any gold, but the price of the gold actually moves up, and they're controlling their costs, that means that the company's stock value can go up. And so, I mean, the two correlate.
Right.
Gold, if you believe that gold will go up or down, you can assume that very, very high probability that the gold mining companies, the companies who actually find that gold, the same thing will happen to them.
That's right. And again, sometimes it's they move quite in sync, and sometimes they start to diverge. Um, but you have seen times in history where gold is going up and gold stocks are going up a lot,
Mm-hmm.
and that's that's where they can be, kind of a supercharged way of investing in gold, if you do it right and if you do it at a good price on those gold mining stocks.
Perfect. So there's a lot to talk about the gold mining companies, between differentiating them between the big ones and the small ones and what that means, and places where they mine and their operations. There's a lot of topics we're going to talk about. And today what we're going to start with is why we shouldn't invest in gold mining companies. Because as you said earlier, Steve, you said in investments, you have to be very objective because you're looking for all the truth, and gold mining companies, there's a lot of truth to look for, as we're about to start discovering. So could you tell us some of the things that we got to be objective of when we're looking at gold mining companies?
Yeah, so you put it really well. We're trying to find the truth. And with gold mining companies, there's always so much hope. It's like, if we discover gold, we're going to be rich. It's there's so much hope. And there's a famous line attributed to Mark Twain where he says, what's a gold mining what's a gold mine? He says it's a hole in the ground with a liar on top. And Mark Twain, we think of him as writing the Huckleberry Finn and Tom Sawyer, but he actually invested a lot of his money from his books, and he learned a lot about investing and the worries and difficulties of investing in gold mining companies. So we talked a lot about the bull market and all this hope and how we're going to make lots of money, but let's make sure we're objective and we don't just get blinded by that hope and not see that there's a lot of negatives with investing in gold mining companies. Like it's there's no guarantees and there can be a lot of negatives. And as you mentioned, there's so much that we can get into and that we will get into. And I just want to touch on a couple of things. And before I do that, our audience here is people looking to somehow invest in gold, rearrange their portfolios so they're more diversified for the future, that I think is going to look a lot different than the past. And we're just trying to educate people the importance of gold mining stocks in that, but also so they understand the risks and so forth. And so two general issues with gold mining stocks are, the first is, and this is maybe applies more to smaller companies, is you get a lot of people in the gold mining business that they like exploring and they want to be paid to do it. So they start a company, they get some money, and they're, oh yeah, we're gonna search this, the Red Lake, Ontario region where they produce gold for 100 years. We're gonna explore that. We're gonna discover gold. We're gonna make a lot of money. And really, all they're doing is give me your money so I can keep exploring. And when I run out of the money, I'll just start a new company. And then every once in a while they do make that big hit, and because they were part of the company and they make a whole bunch. But the investors are kind of left holding the empty bag, so to speak, when they don't find gold. So always being concerned about the management of these companies. Are they really telling you all the truth, or are they just trying to keep themselves employed? So that's kind of the first issue. And again, you see that with smaller companies. So you get this kind of higher risk reward, higher chance of maybe not fraud, but maybe not the whole truth from some of these companies. So they can be quite risky. When you get to larger companies, you talked about this profit margin. We talked, revenues that they're getting from selling their gold versus the cost to find that gold and mine it. So those costs, again, if the gold price is going up, but their costs are going up, well, their profit margins haven't changed. Their stock price isn't probably going to go up very much. It's not going to be that great of an investment. So controlling costs is a big part of gold mining. And it's a big part, if we're in a gold bull market and we think that gold price is going to keep going up, if we can find those companies that can manage their costs and that margin, that profit margin keeps going up, their stock price can go way, way up, right? And we've seen that with a few companies over the last, say, 5 years where the price of gold hasn't gone up much, but they've actually been able to keep their costs low or find deposits where those costs are very low and their stock price has gone up a lot. So that's an important part of investing in gold mining stocks. Again, the average viewer is not like, we're not saying, hey, you should be going reading financial statements or all that stuff, but it's something to be cognizant of, that there is risks in investing in gold mining stocks. There's lots of risks. There's lots of pitfalls. But if it's done right, it's done at appropriate prices, there's enormous, super enormous potential. So that's where, if we get some of that into our portfolios, we got that supercharged kind of aspect of gold investing, it can make a huge difference in your portfolio, 5-10 years from now.
Okay. Yeah, I'm super excited to learn a lot about gold mining companies and all the differentiation factors that set them apart and ways we can invest in them, either specifically in companies we like or through ETFs or mutual funds. And yeah, anything you want to add, Steve?
Yeah, I think what I want to finish off with is, we talked a little bit about caution and patience. And again, the future is very hard to know. But, thinking of investing in gold mining companies, if say we do have a downdraft in gold prices here for a few months, we could see something like gold mining stocks drop 30%, 40%. But if you're ready for that, or you can handle that, we could see 300, 400% after that as the global market kind of continues on. So definitely, I think we have some potential for some interesting times. And if you can be patient, deploying all your capital into the market, I think there's some good potential here going forward.
Awesome. Okay, well, thank you very much, Steve. Next episode, we're just going to talk a little bit about gold mining companies again, and once again, an update about the gold market and what we think about it overall. Thank you very much, Steve.
Thank you.
Bye.